Bank of Canada is holding its key interest rate steady at 2.75%, and that's after a string of reductions. We have another great panel for you. We are joined by Dominique Lapointe, Director of Macro Strategy at Manulife Investment Management. Great to see you. We've also got Veronica Clark, economist at Citi. Veronica, thanks for joining us. And right here in studio, Martin Cobb, Senior VP Equities at Lorne Steinberg Wealth Management and a distinguished student of economic history. Veronica, can I start with you? Did anything jump out for you? I mean, the Bank of Canada saying one scenario where the tariffs aren't negotiated away is a year-long recession in Canada.
Right. Yeah. I am honestly kind of confused at the decision today. I mean, I understand, there is a lot of uncertainty. We want to wait and see how things evolve. But yes, the Bank of Canada outlined two possible scenarios for this year, and maybe, reality falls somewhere in the middle. But both of them had softer growth and below target inflation for the year. It seems strange to me that neutral policy rate is going to be the right setting in that kind of environment. And I think officials would probably see it similarly. And if they think that rates should be lower at some point, I don't know why they wouldn't have done that today, but we'll wait and see how things evolve, I guess.
Dominic, the 8 meetings, this is the first pause in 8 meetings after 7 straight cuts. Are you in any way surprised that given the threatening environment, they've decided to hold steady on borrowing costs?
Yes, we're slightly surprised because our team were expecting a rate cut this morning. They decided to hold. So to us, it tells us that the Bank of Canada is equally weighting at this point the downside risk to growth against the upside risk to inflation. I think it's very difficult positions to be in because we have already signs that the Canadian economy is weakening. The labor market is faltering quite quickly. But at the same time, businesses are telling us that, yes, they will raise prices at least partially to offset those tariffs. So I think Bank of Canada is waiting to see which one will come first, maybe which one will be stronger. And I also want to point out there is the possibility that tariffs get removed at some point. It's still an option. So if that's the case, I think they're concerned about overcutting, assuming that maybe the tariffs are going to get removed.
Martin, the bank did note that we've seen Trump partially roll back reciprocal tariffs. And so they said, well, we've got this awful scenario of no reduction in tariffs. We've got this more benign one that they do get negotiated away. And that moved us closer to the middle, that maybe there'll be some kind of a middle road here. Yeah,
I mean, we sat here a year ago, interest rates were 5%. We've come a long way. It typically takes a year, maybe 18 months for that to flow through. But I'm with the panel and with the previous panel. The insurance policy option of cutting rates today seemed to make a lot of sense. I've said before, tariffs may raise headline inflation rate, but ultimately they will exert a deflationary force on top of a weakening housing market, higher interest rates. There's a lot of pressure on the Canadian economy. They'll cut rates probably in June and continue to cut over the rest of the year, in my view.
And Veronica, that is the central banker's dread, isn't it? Deflation, because it can become self-reinforcing. People postpone purchases, etc.
Yeah, absolutely. And I think we've already started to see that in some of the data. Yes, the March CPI data that we got yesterday, it's before we'll see the price increases in goods from tariffs. But services were particularly weak. If you're pulling back already on those discretionary services, we actually saw similar in US CPI last week, too. That is softer demand already weighing on prices.
Dominic, do you think they could, if the interest rates, if they're reluctant to cut rates further, could they start doing things like quantitative easing, buying bonds in the market, or even start messing around with the reserve ratios of the banks? I think that latter would be quite a drastic step.
Yes, I think the first step would be to cut interest rates. I do think that similar to the Fed, they view QT or the end of QT as being sort of at a stable point. They would probably only decide to intervene in the bond market if we had some kind of problems with liquidity. We've had maybe some hints of that last week in the U.S., so that would have been maybe something envisioned if that would have continued. But at this point, I think either QE or anything with the functioning of the monetary policy is not in the near term.
Martin, The events really are dramatic, aren't they? We've seen this plunge in cross-border travel. We've seen Canadian executives advised to bring burner phones with them.
Yeah, I was actually across the border last week. I left on Thursday, went down for a week to play golf in South Carolina. I came back and the S&P 500 was exactly the same level as when I left. But anyway, that's an aside. This is very dramatic. I mean, it was in crossing the border. I mean, wouldn't say there was hostility, but it certainly felt a little bit unusual, you know, crossing in and coming back. It was like I got a hug from the border crossing on the Canadian side. So this is dramatic stuff. A lot of uncertainty. And we're talking about tariffs, but just think of what is the economy? The economy up here is 40 million people. South of the border, 340 million people. It's their collective decisions. It's based on confidence, having some sense of visibility, some sense of certainty, although it never quite exists. And that's just been blown out of the water, regardless if tariffs are rolled back or not.
And it does seem weird. I mean, I'm a Canadian manufacturer. Do I open a factory in the USA now? Because Trump could be gone in less than 4 years.
Yes, in a year's time, we'll be talking about the midterms and, you know, what that might affect in terms of rolling back policies to try and win those and, get votes for the Republicans that are running for those. Who knows? It just causes the status quo just to stand still, do nothing. You're not hiring. You're certainly not looking to invest. Yes, you want to bring manufacturing back to the US. Why would you make a multi-decade decision to do that if you're not sure who's going to be in the White House in 3.5 years' time?
Dominic, can you just remind us what your view is on further cuts? Do you see the Bank of Canada bringing short-term rates down decisively from here?
So after reading this morning's statement, it does look like the Bank of Canada is almost using the Fed's playbook at the moment. They're really emphasizing the need for more clarity. We doubt we'll get this year certainty on where tariffs will be or if they will get removed, if we'll have more, in which sectors. So the wait-and-see approach works this morning as we're speaking because the unemployment rate is still stable. And as Veronica said, inflation it looks to be close to target. But a couple of months in, if we do see factories closing, if we see massive reduction in business investment because the tariffs are there, or the threats are more, or the uncertainty weighs on the economy, I think at some point they'll have to consider, like we've mentioned, the disinflationary impact, say from a weak labor market, very hard to negotiate wage raises in that context. It's not 2021, 2022. So they'll get to a point, like the Fed, we think that they'll cut more. Is it gonna happen in June? Maybe they won't, since clearly they want more certainty. But by September, I think they'll get there. And to us, it would make sense to cut slightly below neutral. So that would mean maybe getting to 2%. And then you could say, well, we've eased enough so that we're stimulated, but we also don't want to over-ease in that context.
Veronica, the higher Canadian dollar it must be of concern to the Bank of Canada in that it makes versus the U.S. currency, in that it makes our exports harder to sell abroad. Is that weighing on Tiff Macklem's mind right now?
Yeah, absolutely. It's honestly one of the factors that I thought would have maybe factored more into a decision to cut today. Obviously, we didn't get that cut. But relative to the March meeting a couple weeks ago, yes, they're trying to balance these upside and downside risks to inflation. But since then, we've had a strengthening in the Canadian dollar. We've had falling home prices, wage growth slowing, home prices falling, soft CPI yesterday. If anything, the risks certainly look more on the softer inflation side relative to when they cut a month ago. So I would have thought they would have been cutting maybe partly because of that today.
Do you think we could be close to a crisis of confidence in Canada, Veronica, in that firms don't know, should I open a factory south of the border? Consumers, I think, must be thinking about, should I make a major purchase here, especially if my job could be jeopardized? Is a crisis is a big word, but do you think confidence in Canada is weak now economically?
Yeah, I mean, certainly, I think that's, crisis is a strong word, but I think it's certainly, we've seen that in Canada, we've seen that in the US. This is a uncertain environment where you kind of freeze everything. And that means investment, it means big purchases, it means hiring, which this time of year, that could be pretty detrimental because this is a time of year when you usually start hiring a lot of people, both in US and Canada. You could start to see that unemployment rate rising a lot more. And maybe for the BOC, they just need to see it in the hard data. The Fed has kind of been talking similarly, but I think we will see that weaker hard data pretty quickly. And to some extent, we already have.
Isn't there something like sad about this? I mean, I love visiting places like Palm Springs when I get the chance, and I'm not going there now. I don't want to be getting into delays at the border. I mean, it feels like the world's arteries are hardening here.
It is sad, yes. And although it's a bit cheaper to go to Palm Springs today than it was maybe a couple of months ago, airfares were one of the reasons why CPI was down. This is sad. I mean, this too shall pass. You know, it feels like we're in the midst of something that is the chaotic environment for trade policy, which is affecting stock markets, etc. It will pass, but it is sad. At some point, we will have to heal, but it's going to take an awful long time for us to heal.
My wife and I, we drove to Indianapolis once to buy a table. Well, it was an excuse to drive to Indianapolis, but it's so much fun. I love driving around America when I get a chance. Dominic, it's always hard, obviously, with any economic stats. They're often backward looking. Do you think we're underestimating the weakness in the economy right now? Is there pessimism that we're not really aware of right now in Canada?
Well, I'd go back to your previous question. If I go and look at the Canadian Federation of Independent Business survey, it's the weakest it's ever been. It's worse than COVID-19. And then the Bloomberg survey of consumer confidence is also really low. So I'm not sure we underestimate the mood. I think it's pretty negative. It's the first time in my life, actually, I walk on the street and I hear people talking about trade policy.
Right.
It's very surprising, right? So I don't think we underestimate how bad the mood is, but I think it's unclear what the hard data will look like. So for instance, it appears that with the federal government intervention and provincial intervention, most factories, say in the aluminum in the region of Quebec, they're able to keep their payroll at the same time as shortening the work hours, right? Because the federal government will cover some of the losses. So that could continue for some time. You wouldn't necessarily see it into massive jobs losses, massive reduction. But at some point, like this cannot continue forever. So at some point we will see it. So it's harder to gauge what the hard data will look like in the near term. I think that's the Bank of Canada maybe part of their decision today. But certainly the pessimism is there and we feel it.
We better leave it there, guys. Thank you very much. Oh, no, I'm sorry. Yeah, I've just been informed you're so good that we are going to be coming back to you after this. We've got Dominique Lapointe of Manulife Investment Management, Veronica Clark of Citi, and Martin Cobb of Lorne Steinberg Wealth Management. We're going to come back and we're going to drill a bit further into the Bank of Canada thinking here. We'll be right back.